Phil, William, Lilith, good morning. How are you? Give people a couple seconds, couple minutes to join, and we'll start shortly. Okay. Chad, good morning. All right, feeling fine. Sound good today? Yeah, I'm back in Chicago. In my studio, it's better. All right, let's see. How's the YouTube, guys? YouTube channel should be live. Let's see. Wednesday live streaming, 3 watching. All right, welcome on YouTube. We are live. Okay, then let's start. Oh, Discord. Forgot Discord. Give me 1 second. All right. FTLT, welcome. All right, let's start. Welcome to Tradespoon and Yellowtown. Today we're going to have a live trading room open to trade stock and options using Tradespoon technology. For those of you who are new, welcome. If this is your first live event, do me a favor, type in first. Always want to welcome new subscribers. Disclosures are important. Trading stock and options involve risk, not suitable for everyone. You must be aware of the risks and be willing to accept it in order to invest in current market conditions. I'm not a financial advisor. I'm not registered with FINRA nor SEC. I'm showing you what I do in my own account based on my own risk tolerance level for general education information purposes only. Please consult your financial advisor prior to making any trading decisions. All right, hold on. Let's see. I think this is the wrong slide. 1 second. Okay. Very slow. Okay. Bernard, good morning. Fred, good morning. Raymond. Fred, audio is poor. Okay. Let's see. How's sound? Does everybody sound good? I'm back in Chicago, so the sound should be better. Let me look at my speed test. Speed test is okay. So I'm on a pretty fast connectivity. You know, the mic is a good one. So if you have issues, maybe try to reconnect or try to run speed test on your side and see if it's a difference. Ted, good morning. Sound is okay. Sound is great. Fine. Sound is perfect. Audio. Okay. Okay, I think it's on your side, Fred. Try to connect via phone. All right. So let's go over, again, idea of trading psychology. Monday and Wednesday, we have broadcasts on YouTube. Let's see how many people are on YouTube. No. Still 3. All right. Well, now 8 watching. Okay, so people are joining. Okay, so welcome on YouTube. Please join the YouTube channel if you guys have a chance to look at the live broadcast. We do have a lot of the new subscribers. Again, let's go over the important trading psychology terms. One is the dichotomy of control, right? Why is the dichotomy of control is important? It basically says that you only have control over your thoughts and your actions, right? You can't control what other traders will do. You can't control what Fed will do, or Bank of England will do. So, and that will affect the market. It will affect the market, and it will affect the outcome of the market. So I encourage you to concentrate on things that you can control, and control your thoughts and your actions, right? Controlling thoughts, example of being very negative, right? If the trade goes against you, you try to basically use exaggerated words, try to blame yourself, or you use your ego. So that would be an example where you can review your thoughts, you can write them down in a journal. I encourage everybody to journal and decide whether this is the right thing to do or not, right? And I encourage you not to use exaggerated words, use different other ways to control your thoughts. In terms of actions, we can all control our actions in terms of how much cash you have. I propose to have 50% of your portfolio in cash. How many positions you have? On average, to have 4 positions, right? That's the next slide. Let's just make sure we're... So cash, 50% of portfolio in cash in bear market. In the bull market, 30% of your portfolio in cash. Do not trade on margin, especially in the bear market. 4 positions, no more than 4 positions. Why 4? Markets are very highly correlated to interest rates and currencies, right? We talked about yesterday. Somebody asked, will the market break through 380 on spiders, or will it reverse down? And I said, it will break 380 at some point, probably not this week, or maybe not even next week, maybe after midterm elections. And it will trade in the range, especially that interest rates did not fall, right? And now they're rising. So that's the idea, is that everything is highly correlated to interest rates, right? And even if certain sectors are outperforming, like utilities or energy, eventually they also follow the market conditions, right? So there are some aerospace and defense. There are some stocks like Lockheed Martin, right? They had strong earnings. There's some pockets of stocks that can outperform the market, but still not for a very long time. And for that reason, there is no reason to have more than 4 positions. 4 positions and maximum loss of 2.5% of account value per position. Right? That is something that we can all control. Number of positions, position size, and cash. A lot of people buying only puts and calls, right? And if 4 positions and you allocating 2.5%, that means 90% of your portfolio is in cash. Everybody always says, what do I do with the rest of the cash? My answer is you wait, right? You wait, because you should treat puts and calls as derivatives of underlying stock. And if you take the strike price and multiply it by number of shares in the contract, then you will see that you are leveraged, right? Options allow you to leverage. So if you buy one contract of QQQ, you owe $28,000 of market. So even if you have 90% of cash, you still trade in 28,000. And if QQQ is down 2%, right? So we have daily fluctuation of 2%. That means you're down 2% of potentially $28,000, right? Depending on delta of the strike. But that is a very important concept. And somebody who's new, that is probably the most common mistakes, right? You always trade one contract, or you always trade 10 contracts. Well, 10 contracts of QQQ and 10 contracts of 4 gives you completely different exposure, right? So for that reason, I encourage you to use 2.5% of account value per position. Only have 4 positions and go through the negatives. The next slide is the negative visualization, right? Not only should you go through positive visualization, right? Market rallied. Everybody's talking about Christmas rally. That this is finally signs of capitulation. Market is going to go higher, right? So you're buying the stocks because you think that the market is going to continue going higher. So you basically, market just opened. So how do you determine your target gain and stop losses? Let's say we were talking about bottoming process, right? The good news is that if you go back to last week, when we were talking about the bottom and how long will the pullback last, I said nobody knows where the bottom is, right? We reached 357, now we reached 350. There really no indication of where the bottom until you have at least 2 or 3 days of follow through, right? On this leg down, we had 2-3 days. We did not make new lows, right? Continue to go higher. We overshot on the downside after the CPI print, worse than expected. And then again, day 1, day 2, day 3, day 4, we're not making any lows. So most likely, this is an example of the bottoming process. We reference June, July bottoming process, right? It took also almost a month. And here it's taken close to a month, right? We started this in end of September and probably going to go into end of October. So very similar price pattern. Here it was higher, right? If you look at this price pattern, it was higher lows, right? We had triple bottom. Here we have lower highs, right? Lower potentially, right? Lower highs, right? But we are trading in a well-defined range, 380, 350. There's 2 things that can happen in the next few weeks, especially after midterm elections, right? After midterm elections, we're either going to continue going higher or we're going to continue going lower, right? Scenario number 1, scenario number 2. So we're going to be trading in this range the way we did in June and July. And then there is a breakout, either to the downside or to the upside. The same thing happened in May, June, right? May, June. Here, the follow-through was very short, right? May, June was very short. In March, it was pretty substantial, right? So this is, I think, 15%. I think this is from the bottom about 20% on spiders, right? So 20% rally, 15%. This is about 8-9%. So how far will it go? Will it be something like this, where it's another 5%, or will it be a little bit stronger than July, August? We will see, right? Or we break into the downside, right? Something happens in the market, negative bad earnings, or still uncertainty, maybe house and Senate is divided again, right? 50-50, and there's indecisive, right? That also can cause uncertainty. So those are the 2 scenarios. I encourage everybody to kind of, either if you're a day trader or if you're a longer term trader, you have to kind of, this shorter term trader have to decide whether you're on the side of 1 or on the side of 2. So how many of you say 1? Type in 1 that basically say sometime between now and after midterm elections, maybe between next 30 days, right? Between now and Thanksgiving, right? It's getting colder in Chicago. I came from Florida. It was 85 degrees, and it's 35 degrees in Chicago. So Thanksgiving is approaching very quickly, and Halloween. So after sometime in the next 30 days, are we going to 400, or are we going to 340 or 330? Right? That's a lot of people are calling 330, 340. So one or two. Let's go over that. On Discord, if you guys can type inside of stream chat, that'd be great. I'll give you guys a couple minutes to think about this. You can type it in the chat, or you can type in YouTube. Let's see how YouTube's. All right. I think there's a chat. You can type it in the chat. Okay, let's see. Or you can type in your sounds fine. All right, Alex. Okay, so you can type in inside of the chat. Type your questions. So I'll make sure to answer them. All right, so 2 or 1. FTLT, do you think 1 or 2? All right. Good morning, Carmen. Attends and Bob for 2, 2, 2. Wow, a lot of 2s today. Everybody's 2. Wow. Almost 9 to 1. So Fred, audio is perfect now. Perfect. Okay. So everybody said 2. I'm kind of surprised. Maybe I was in Florida for too long. I'm going to go with 1. Right? I'm going to go with 1. I think we will break out of this range at least probably after midterm elections, if I have to guess. And I think the bottom is here to stay probably till the end of the year. At this point, I don't think we're going to break through the 350. So I think something like this will pull back, and we retest 380, potentially retesting it multiple times, and then eventually we break above. Right? So I think this is a core scenario. We are trading in the bear market. So everybody who said 2, that doesn't mean I have to be right. I think that's also possible. But something has to happen in the market. So far, earnings are within expectations, better than expected. I mean, there'll be new CPI print in November. It looks like it should get better now, right? It might not be 2%, but it should drop. I think the estimates is 6%. 6% year-over-year CPI by end of the year. Rents are, the house sales are going down, the used car sales are going down. There are signs that CPI should subside. So for that reason, unless there is some negative catalyst in the market, which always can happen, right? It can always happen. The market has an opportunity to go to 400 to 410. And if you look at the stock forecast toolbox, right? If you look at the 6 months prediction, it's calling for 395. 395 for spiders. 395 for spiders. All right, so let's say, so if you said 2, majority of you said 2, right? And everybody wants to short the put, and it makes sense because of conditioning, right? Always trading psychology is important. If we were down for the past 2 months, almost every day, and every rally is met with the sell-off, then you're conditioned to kind of understanding that most likely this market is going to the downside, and it could, right? Just because I think 350 will hold, it doesn't mean it will. So how do you use the stop losses, or how do you determine on your stop loss? So since most of you are bearish, at least based on the answers so far. Hi, FTLT, 1 or 2? So, okay, so you have 350 and you have 380, right? So let's say you're short the market, right? I mean, right now, we're closer to 380. What's your stop loss if you, let's say, you want to short, right? If you want to go short, you have resistance 1 is 380, and after resistance 1, so it'll be 390, right? These are long-term resistance levels, right? This is not something that market haven't experienced, So resistance 1 and then resistance 2, right? And then resistance 3 is around 410. So market will rally very quickly to 390 or potentially even 400, right? Kind of, 390 was this overhead resistance from the June-July low. That's why I think 390 should at least spend some time at 390. So that would be your stop loss, 380, right? Let's say you want to short the market right now, right? You want to sell short the market, 369, right? So then your stop loss, 370, 380 is about 10 points, right? A little bit higher, maybe a couple of points higher. Give yourself a little bit more room, but let's call it 10 points, right? So your downside, FTLT, can I repeat what the numbers say? Sure. I forgot. I think I said 1 or 2. 1, in the next 30 days, market will approach 400, or in the next 30 days, market will approach 330 or 340, right? So 30 points to the downside, right? So we'll call it 30 points to the downside or 30 points to the upside in the next 30 days. Which event is going to happen first? 350 or 400 in the next 30 days? All right, 1. All right, FTLT, thank you. Okay, so majority said 2, that's fine. So that means we're shorting the market, right? If we're bearish. When you say short the market and you go in long, then there's a disconnect between what you think and what you do, right? I'm going to make an assumption there is no disconnect, which I found very frequently. People are always bearish and they're buying Tesla calls. I'm like, why are you buying Tesla calls if you're bearish on the market? That doesn't make any sense. So, at least I always trade with a trend. I don't like to trade against the trend. So assuming if you said bearish, you're shorting the market. If you short the market right now at 360, let's call it 370, 369, your stop loss is 10 points, right? On a $10,000 account, I propose not to risk more than 2.5%. Right, so 2.5% is $250. $250, that's your maximum risk. If you're risking 10 points, if your stop loss is 10 points, then what's 10 points? If you're risking 10 points, right, that's your stop loss, then how many shares can you buy? 25 shares, right? So not buy, sell short. So most of you said negative. That means you're shorting the market. You sell in spiders, or you're buying spiders puts. I encourage you, if the market goes above 380, day 1, day 2, you probably want to get out of this short position, right? So you're risking 10 points. So that's negative visualization. That's determining stop loss. I encourage you to journal and write this down. Write down we're in the middle of the earnings. What are the earnings announcement? Write down what is going on with interest rates. Interest rates are continuing going higher, and so on and so forth, right? But you document details. You document the number of your stop loss. You document how many shares you buy, selling short, right? And what your target, right? Maybe your target is 250, right? Because it can drop 30 points down, but at least 20 points down from 370 to 350. You're targeting 20 points to the upside, that market will pull back to 350, and then your stop loss is 10 points. That makes sense. 2-to-1 risk versus reward. Any questions on YouTube or Discord or go to webinar? Okay, sounds good. All right. So what are the strategies that work well in this market, right? So if you look at Yellow Tunnel or you look at Tradespoon, right? We have both of these trades. The idea of earnings, right? We have in the middle of the earnings, so you have premium on both sides. Right, so Johnson & Johnson announced earnings, kind of a mute reaction, right? It's basically trading, I think, flat. So it's flat, right? After the announcement, basically not going anywhere. You do have Netflix of the world that announced better than expected earnings. Let's reload this. Right, so you have Netflix up 12%. You have Morgan Stanley. JP Morgan, Bank of America, announcing earnings. So how do you take advantage of this move? So you sell premium, right? The most popular options trading strategy is to find some kind of a range where the stock can trade, right? So I sold 160 put, right? And I sold 172 call, right? So the range is between 172 and 160, right? And there is a bell-shaped distribution curve of all the outcomes, right? The most common outcome is 1 sigma move, right? So you have 1 sigma move, basically saying roughly 70% of the chance stock is going to trade in this range. And then there's a 90% chance, right? 90% chance that it will trade in a wider range, right? So if you know, so most popular strategy, depending on how much premium you're looking for, you sell in these strikes 1 sigma away, maybe delta 70, right? Or delta 60. Or you sell calls and puts 2 sigma, delta 90, right? All depends on how much premium you're looking for. In this example, 30 cents plus 30 cents is 60 cents. And it's trading at 165. So it's about 0.5%, a little bit less, 40 basis points, right? So the idea is that you look at the range where the stock might trade. You look at the spikes in volatility, right? You want volatility rank to be high during earnings, or in a bear market, volatility kind of always high. And you sell premium. And then by certain time, right? The idea that the range, the longer you give, if you want to sell monthlies, right, and go to November, well, the range is going to be wider, right? Then Johnson & Johnson might trade in a bigger range. But the same strategy, the earnings strategy actually looked at that 50%, more than 50% of all the options volume right now are weekly options, right? So nobody has, half of the people don't have a long-term horizon, right? Their horizon is 1 or 2 weeks. So people are trading weekly options. Some people do it this Friday, some people might do it next Friday, but it's all the same. It's basically saying that what is the 1 sigma move, what is the 2 sigma move? Maybe I want to give myself a little bit more time, or maybe I want to collect a little bit more premium, and that will be the strategy, right? And then you try to close. So I just got executed on 160 put. I'm waiting on 172.5 call. 172 call for 5 cents. So that would be the strategy, right? Selling out of the money premium based on certain time frame and the range that the stock can trade, And if the trade, sometimes trade goes against you, and then the idea is to defend the trade, right? Similar to what I did with JP Morgan. So that is the current trade, right? So you can find these trades on Yellow Tunnel. Same thing is available on Tradespoon, right? If you go to Elite Trading Circle, you can see the same trades. Any questions? And in terms of yesterday, let's review some of the trades from yesterday, since I wasn't here. I did close NOC, right? LMT, Lockheed Martin. The war in Ukraine, unfortunately, continues on, only escalating. Lockheed Martin had a strong earnings, up, I don't know, 7-8%. And LMT also higher. So I decided to close the trade, right? Again, using dollar cost average, right? The idea is you sell at, what did I buy it? NOC. Right, to continue to trade around this trade. So, sell at 513, 505, 484. I'm using dollar cost average, then buy again at 477, and now again sell 487, 501. So I believe that's the only trade from yesterday, since and 375, I did partially close the spiders. All right, any questions on the strategies? And again, the idea is compounding investing, right? The idea is that you look for 0.5%, maybe every trade always the same size, right? Because you want to defend the trade. So going back to this Johnson & Johnson trade, realize that one contract you're trading $16,000, right? In JP Morgan, it was 100, whatever the JP Morgan trades, 115, right? So one contract is 16,000, right? When Johnson & Johnson move 1% against my position, it's 1% of 16,000, right? It's $160, right? When Ford moves against you, I don't have Ford position, but if Ford, you have one contract, or LMT, let's say you buy one contract to LMT, when LMT moves 1% against you, that's $4, right? Whether you have a put or a call, right? Assuming that's high delta. So that's very important, and you need to defend it, right? If, let's say, Johnson & Johnson would have better or worse than expected news, right? Like Netflix, if you sold Netflix calls, right? If you sold Netflix calls and the stock is at 277, then you would need to defend your position, right? Because Netflix, continues to go higher. So one way to hedge, if you sold short call, you bearish, right? One way to defend your Netflix position is to buy one. So that would be the strategy. Let me know if you have any questions. Discord, YouTube, and go to webinar. Fred, I'm usually correct, so no one. I mean, you need to be flexible, right? But the idea is, one thing that I learned is you cannot change your opinion, every day too, right? Or every other day, right? We've been talking about consistently, when market was at 410, 420, we're in bear market, so market is going to sell off, right? Especially if you follow, market, let's see, market brief, or let's look. Market briefs. Let's see if we post. We post in the description. It says 5 minutes. We don't. Okay. Should start posting. But if you watch the videos, right? If you watch these videos on Yellowtown or Tradespoon, I always describe, whether I'm bullish or whether I'm bearish. And you can see that, I was bullish, bearish when the market reached 410 probably, right? Was not completely right? Market overshot. But I would consistently be bearish, right? I would not chase the market to the upside. And then when it sells off, when we did reach around, this level, 3060, I said it doesn't make sense to chase the market to the downside. It makes sense to start lowering your exposure and closing some of these short positions. And I'm going to repeat that, right? I'm not going to change my mind, right? The trend, I believe, is to the upside. I think the trend is to the upside. And I would use pullbacks to accumulate long position and close short position, right? In the bear market, I believe you should always be long and short, right? It's just right now, I think, maybe you have 3 pluses, right? Out of those 4 positions, you have 3 bullish positions and 1 bearish position. Bearish position because everybody's extremely nervous, right? And any negative news, especially new news, right? Prime Minister of England resigns, right? And now Labour Party comes to something like this, or credit default swaps are at 2008 level, and Credit Suisse defaults, right? Big events like this, yes, market will be, market will react to it, and we will retrace the gains. But you just don't know when, Prime Minister of England will resign, or if and when, right? Or if and when, Credit Suisse will default. You just don't know, right? Going back to, the economy of control, right? You cannot control, when Credit Suisse will default, right? You might think about it. Maybe everybody talks about this on the internet, but nobody knows, right? So you look at the price, you look at the action of the market, and you continue on. United Airlines, nice earnings, up 6%, kind of following Delta. Thank you for Bob bringing that up, right? Same price action, United Airlines, Delta Airline, and what's the other one? Procter & Gamble, right? Procter & Gamble, up 2% on the earnings. And then okay, so thank you for letting me know. Carmen, always percentage. Always think, it's a very good question. Most of the new traders, or even experienced traders, only think about absolute values, right? You only think about 1 contract of QQQ, 1 contract of semiconductors, 1 contract of, FXE, or 1 contract of, I don't know what else is small, ARC Innovation. But 1 contract of ARC Innovation and 1 contract of QQQ is a big difference, right? So if, let's say, ARC is dropped by 3%, it's down $1, right? QQQ down by 50 cents, it's down $1.35. But, that means, they are 1 to 10 in terms of volatility, but that doesn't always happen this way, right? Let's assume they are down at the same point. Well, let's look at semiconductors, right? Let's say you have 1 contract of semiconductors, and you have 1 contract of spiders, right? They're 2 to 1. They're highly correlated, 50, 0.5% down, but one is down $1 and the other one is down $2.42. So when you have 1 contract of puts or 1 contract of calls, you have twice as much exposure to spiders than you do have to semiconductors, right? So depending on the account size, maybe if your account size is less than $10,000, it doesn't make sense to trade 1 contract of spiders. Then you just buy shares, right? You buy 10 shares, 20 shares, right? Or maybe you trade semiconductors, right? Semiconductors are highly correlated to spiders, right? There was actually very interesting studies that they're now and that's kind of a bullish sign. One of the bullish argument, if you look at the Russell 2000 was down 32%. Russell 2000 was down 32% back in June, and it's down 32% now, right? And then spiders were not down 32% in June, they were down 25%, and now they're down 27%, almost close, right? So Russell 2000 is not going lower, right? Small cap stocks that are a lot more volatile, a lot more susceptible to the recession, they're not down more, right? They're holding their bottom, right? And that's a bullish sign. Maybe not the sign that this is the bottom and bull market has started, but at least that the lows are in place, right? At least that the lows are in place. Where in the forecast toolbox would you find a reasonable spread? Ted, I'm not sure what you mean by spread. Strike spread? Stock forecast toolbox, the 10-day doesn't show. I mean, the only spread it shows you, right? It shows you support and resistance, right? So market model is actually, the vector is getting less bullish, right? It shows that the market is overbought, right? It went from negative to positive, now neutral. It does see that 380 is a major overhead resistance. It does see 371 is the support, right? The lows for today were 367, right? We're at 368. So it does show you that the reasonable, range where the stock market is trading is about $10. So when when VIX is at 30, on average, every day market will move 2%. And the model basically reflects that, right? If VIX is going to collapse to 25, 20 level, you see the spread will collapse as well. Yes, Fred, I will do Schlumberger earnings, yes. Raymond, yes, I'm long TSM. I'm not long here. I don't trade every single, I don't trade every single trade in the trading block account, but I'm long TSM. John, so JP Morgan analyst said that, yes, so the idea, right, so I'm in the same camp, right? This was 2023 question. So I think market is oversold. I think we will break out, from 380 range. We'll get to 400, but I still think we're in a bear market. So by definition of bear market, you have lower highs, lower lows. And in 23, I don't know what beginning means, but I'm going to be just conservative. I will say first half, right? So the first half of 2023, right? First 6 months, it's either going to be, I think the next wave down will be brought by deterioration of earnings, right? Right now, we don't see high interest rates or strong dollar deteriorating earnings. I mean, you look at the banks, their earnings obviously deteriorating, right? The revenue is down 20 to 30%, but not enough to justify, 50% drop in JP Morgan. So right now, the reaction is positive. I think, next wave of earnings in January, right, or April, you will start seeing deeper effect of a strong dollar and high interest rates on the margins and net income and top line of the S&P 500 companies, and that's the next wave down. Right, so we went from 440 to 350. We dropped another 100 points. It's conceivable that we're going to drop. A lot of people say 300, right? So somewhere between 320 and 320 and 300, right? Mike Wilson said 320 to 300. Right now, but again, this is just an estimate, right? Once you're at this level, people are going to revise it, and we'll start calling for more. You just don't know. Yeah, it could stop here or it could go further. But I am in the camp that next. Most likely by April, if I have to pick, most likely by April, we will be at 300, 320. But not before that. Not now, right? Not now. Bear market should finish by end of the year. I am in that camp too. I mean, that average recession is about 40%, right? 40%. So we were down 26%, right? Average recession is down 40%. 40% would be, what would be 40% top to bottom? 40% is 280, right? 320 would be 32%. So I think mild recession, if it ends like, first quarter or second quarter, then we're down 33%, right? 320. I think at least 40%. So I think we will get to 280 level, right? I think we'll get to 280 to 300 level. But historically, if you look at every recession, the deeper the recession, the deeper the drawdown, the higher the rebound, right? Going back to the spring analysis, right? So the further you're going to pull the spring down, the much further it will rebound, right? Eventually. So if the market is down 40%, in the next 3 to 4 years, market is going to retrace all of the losses and start gaining. So in theory, if you're a bear, at some point, when the market is down 30, 40%, this is where you want to get contrarian and start being aggressively bullish, because you can't really time market perfectly, the bottom. But if the market is down 40%, I know in my 401k, I'm going to start deploying cash aggressively, right? Right now, I don't, because I think this is for a recession, down 27% is just not enough. But 35%, 45%, okay, that's a good size. So, and that's when you get aggressive. Fred, thank you. Zigzag. All right, so it goes up and then lower, goes up and goes lower than bear market. Supposedly, I guess the real signals will be when the Fed stops raising interest rate. Almost every bear market, usually over. Yes, that is my opinion too. John, which John? Based on the question, doesn't sound like John from South Carolina. We have multiple Johns today. Let's see. Right, it's different John. All right, John. John, where are you from? Which city are you from? You have one from South Carolina or state. All right. What is my opinion? Yes, I am in the same camp. The bear market will end when Fed will pivot. Right? When Fed will say enough is enough, and we see that our goal of containing inflation has been reached, right? And it has to be as clear as that, right? They're going to say that we are pausing, and we're not going to raise interest rates anymore. Once they said that, once you have that list, once you have that event, that's where the market is going to will be very close to the bottom. Will be very close to the bottom, right? As long as the 10-year yield continues to go vertically up, market is going to have hard time going higher, right? It's impossible, right? But once you start seeing this, right? Once you start seeing this, then we are at the bottom, right? A lot of people call 2% right now, that we're not going to 0, but we're going to 2%. So once interest rates get to 2%, that's probably going to be close to the bottom. Until we get to 2% interest rates, the bottom is anybody's guess. And the longer we're staying above, the longer we stay at 4%, the deeper the recession will be. Right? The deeper the recession will be. FCX, yes, we'll do the earnings on FCX. Thank you. Kara, what are your thoughts on NVIDIA by December? NVIDIA, same camp, right? Market cannot go higher. And I mean, granted, NVIDIA has earnings, right? And they have a lot of exposure to, chips used to mine cryptocurrency or video gaming, right? So people are playing less video games in recession, and they are, obviously mining less Bitcoin. So individually, there could be an exception, right? Individually, it could be an exception, but in general, semiconductors are extremely oversold, right? And you see they're basically approaching the February 2020 high, pre-pandemic high. So I think there's little room to the upside and a lot of room to the downside this year, right? Maybe this. I still think it's lower high, right? I still think it's a lower high. but it could get to 220, right? 50 points, I don't know, 30% move, 40% move is totally fine, and then follow the pattern. And I believe every stock will have this pattern, right, without any exceptions, especially once we get VIX above 40. Other exceptions, yes, NOC, because it's a different story, right? So if there is a different story, and Europe and United States are spending a lot more on aerospace and defense, and their reserves are depleting, so they need to buy more weapons and build more airplanes. Well, NOC and LMT are going to trade higher, right? But that's an exception, right? If you can find these exceptions, that's great. But you just have to be careful, right? You have to be careful. Like, that's how utilities looked, September, right? On September 6th, utilities were 52-week high. They were, year to date, they were up, 10%. Only to drop to 60, right? Big drop, and now they're probably similar to the rest of the market, right? Similar to spiders, 1-to-1. Spiders down 25%, they're down 22%. Same thing is going to happen to NOC, right? At some point, this is not an interest rate sensitive story. This is a story of, Russia, Ukraine. At some point, if there is a de-escalation or some kind of a agreement between Russia and Ukraine where, enough is enough, the stock is going to do the same thing that utilities. When is it going to happen? Well, for now, nobody knows. All right. Then cut good FCX. Yes, we'll do the earnings. Let's see, 9:10. Let's go over the positions. I'm going to do it at the closing bell, so you can watch the earnings, Power Trader. I prefer not to do earnings in the middle of the day, for one simple reason, because we've seen reversals. Almost every day we have market up 2%, down 2%, up 2%, down 1%. So if spiders going to reverse, right, and continue to trade higher, I don't want to get caught. So watch the earnings Power Trader or Elite Circle, and I will do at least one trade, similar to Johnson & Johnson. Oh, now Johnson & Johnson. So I'm out of Johnson & Johnson trade now. All right. John, thank you. Ted, to make a spread trade, again, if you're using 10 days, right? If your time horizon is 10 days, and let's say you bearish, right? I think you said 2, right? You think the market is going to go down. I would maybe buy 380, 370 put spread, right? 10 days. If you're thinking about, December, January, longer term, I would go to 6 months. If you want to buy a put spread, right now it's trading at 370. I would trade 370, 340, right? Because you look at the lower strike, right? So I would buy maybe 370, 340 put spread, right? Or 370, 350 put spread if you're bearish. If you're bullish, I would buy 370, 400 call spread, because most likely it's not going to get to much higher than 395. So selling 400 call right now, November, December, makes a lot of sense, because you're betting that the market is not going to go much higher than 400. Carmen, thank you. My thoughts on NVIDIA and TSM are the same, right? The reason I recommend TSM, I think semis are oversold and they're going higher. Right? You can see today, semis are up 20 basis points and QQQ is flat. And one of the reasons is ASML. Right? As earnings start hitting, you have ASML up 5%. The reason I recommend TSM, because, well, TSM, it was a Taiwan maybe that has some, geopolitical risks. But ASML, if it doesn't have geopolitical risk and it had good earnings, then probably ASML will outperform semiconductors, right? Because it had better than expected earnings. It's up 5%. It will probably continue going higher. All right. They are in downtrend. The reason I'm recommending them, because I believe there will be a Christmas rally. John, pandemic bottom next year. I have not heard that. I haven't seen anybody calling for pandemic low. Pandemic low would be down 55%. So is it possible? Yes, it is possible. But then you have to go back to, when was the last time we were down 50%, right? The last time we were down 55% was in 2008, right? In 2008, from top to bottom, we dropped 55%. Even in the, what is it called? Internet bubble, right? Internet bubble in 99, 2000, we were down 50%, right? So do we have a similar situation where, the evaluations of internet stocks are just out of this world, where people were selling ice to, Eskimos, and they were able to raise millions of dollars? We don't have that conditions, right? We don't have where people selling T-shirts and evaluating the company at $50 billion, right? We don't have that right now. So I don't think this is similar to internet bubble of 99, right, 2000. And as of right now, there is no signs of financial contagion, right? So 55% drop, I mean, those are the last two recessions. So from that perspective, you can basically make a speculation that we're going to have a similar recession that we did in 2008 and 2000. We're going to retest the lows. Obviously, it's possible, but I think current conditions are unlikely, right? We don't have contagion. We don't have extreme evaluations. We do have inflation. If inflation is not going to start subsiding this year and going lower next year, right? If we're going to be in October of 2023 and year over year inflation is still 8%, then yes, market will drop 55%. But at least the consensus right now that inflation will be down to 4% by October of next year, right, or 3%, right? And economy is still healthy. We're still at full employment. There is no systemic risks, right? So a lot of people do draw analogy between 2000 and 2008. I'm not in that camp. Timing wise, very similar, right? If you look at the 2008, right, it started dropping significantly on Lehman collapse in September, dropped in October. It reached November, some kind of a bottom, right, in November. It overshot by a little bit, but that was the bottom, right? And then starting March, higher highs and higher lows, and off we go. I don't think we're going to have the same pattern, even though it's very similar pattern to 2008 in terms of timing wise, right? The seasonality and the time, but I don't think it's going to be the same, right? I think we could reach the bottom in March of 2023 or get very close to them. That I believe, right? But I don't think we're going to be down 55%. I think that would be extreme. Is it possible? Absolutely. Is it high likelihood as of right now? No. But it doesn't really matter, right? It doesn't really matter because, well, it does matter, right? If you're a long-term investor, right, and you're thinking about your 401k and somebody tells you the market will be down 50% and it's only down 25%, then you probably don't want to be a long-term investor, right? You want to be a tactical short-term trader. All right. Coincidence? William, I don't know. We'll see. Oh, Hershey, Pennsylvania. Welcome, John. Welcome. Definitely interactive brokers and seems he expects SPX to bottom at 3,000. A lot of people calling the bottom at 3,000. If people right now calling in the 3,000 and the market always overshoots by 5% at least. So okay, then if you call 3,000, maybe 2,800, somewhere between 2,800 3,000 is a good estimate. Carmen TBT bond, ultra short, right? I don't trade ultra short shares. If you want to trade something, then you trade TLT, right? But I would not trade ultra short. Right. So more restriction. U.S. putting more restrictions on selling the semiconductors to China. Yes, that's a headwind. Thank you, John. Oh, John, yes, I am. I'm from Ukraine. Yes, I was born in Ukraine. Speaking of Ukraine, the situation is only getting worse, right? They're targeting, Russians are targeting Russian force, right? Not Russian people, but Russian army is now targeting the energy infrastructure, right? They're kind of using these terrorists tactics. So I'm on the board of directors of gate.org, GATE.org. This is all done by volunteers. I'm on the board of directors, and you can see we are have 24% of families get approved. Ukrainian families can approve, and then if you donate, the money go directly to their family, $100 per family, no more. That's about 1 month's worth of food supply and medicine. So if you're able to donate, please do so. And I put the link and gave that in the okay. John, don't sell naked short calls. I would do a credit call spread, right? You sell 400 and you buy 410. Right? I like AMET. Right, 30 VIX implies 2% daily move, as you noted. Yes, Bob. I like AMET over TSM. Okay. Set up that. Thank you. John, thank you. Rajesh, when you sell cover calls, right, annualized return 15-20% would be good. Yeah, sure. Monthly return, that would be 1 or 2%. That's reasonable in this market conditions. Carol's STLD report earnings as if I was going to sell 75 put by mistake and bought a 75 put. I mean, if you bought put instead of selling put, and it continues to go higher. I mean, it has earnings, right? And the earnings, they can drop or they can rally, right? Like Netflix. So, when I make mistakes, I usually just close and start all over again, right? The trade is selling out of the money premium. So right now, I would just take the loss and, fix it. Oh, William, thank you for sharing the story. All right, it's 9:21. There are a lot of questions today, so that's good. I appreciate the questions. Let's quickly try to go over the rest of the positions just to make sure we're on the same page. Okay, so Johnson & Johnson, I'm out. QQQ, right? If you look at the QQQ, actually turning positive, I am... So again, long-term bullish and bearish at the same time. I think in the bear market, that's what you need to do. You need to be bullish and bearish, and then you just have to decide, overall your portfolio, what is the correlation to the stock market. Right now, I believe correlation should be somewhere around 1. So if market goes up 1%, your portfolio goes up 1%. I would not be more aggressive. At least that's my portfolio. So market is up, my portfolio is up, but I still hedge. So QQQ, I have 300 put call, right? We were talking about 300, 310 call spread. I still believe by December we will approach close to 30. I did close the short call, right? It financed my long call, and I believe we will get close to 300 by end of December. But I also believe by March we will probably approach 270. Again, retest the lows by March of 17. So calendar spreads, right? Very popular right now. So if you're bearish long-term but bullish short-term, then you do calendar spreads. And this is an example of a calendar spread. Still have a small SH position. I encourage everybody to close or trim your bearish positions into pullbacks. I did that with SH. With the spiders on pullback, I accumulate, right? I close one position. I still have 2 more. of spiders that I'm going to continue trimming as we're approaching 400. Banks, better than expected earnings. The earth is not falling apart. I believe by December we will stay above 30, and banks going to continue to rally. But by March, similar to QQQ, I think we will drop below 30, as banks going to get affected by the high inverted yield curve. XLK, I'm bullish on technology. I did add on to bought 115, 120. I like XLK. It's less liquid, so it's not as liquid as QQQ. That's the drawback, but it's half of its strike price. So when I buy one contract, that's $11,000. When I buy one contract of QQQ, well, that's $30,000, right? So for that reason, I bought 115, 125 call spread. And finally, I'm still bearish on XOP. 130, 120 put spread, maybe close the short put if I do see reaching some kind of a overhead resistance. Right, it's kind of been stuck in this range. I mean, you have Schlumberger announcing earnings. It might jump to 152, but I think, I think the path of least resistance is lower. So by December, I think we can revisit at least 200-day moving average, if not lower. All right, that's all I have for today. Keep an eye on the text messages. I'll try to do another earnings strategy. Carol, I mean, that's what I sometimes press the wrong buttons too. Then, I just take my losses and, reverse. Raymond, thank you. Carmen, thank you. Thank you, Raymond, for kind words. All right, guys, consider donating to gate.org. Please like us on YouTube, right? If you participate live, right? Closing bell, I'm going to do earnings strategy. You don't have to have a Lead Circle subscription or Earnings Power Trader subscription to know what I'm going to do tonight. Before the market close, you just join in live trading room, right? You join live trading room. If you like it, right, please click on share, right? Click on share and share the link, if you're part of any trading community, right? If your friends or family trading, or if you're part of any forum, take that link and please put it in the, share it with the rest of the team. All right, guys, that's all I have for today. Scott will be here at the closing bell. I will be back tomorrow morning. All right, thank you very much and have a great day. Discord subscribers, thank you. Thank you, John, for kind words.